What's happening? What's going on? I'm excited about this video. We're going to talk about how to set up the 5 business accounts that you need when you just starting a business, or if you already been in business. So if you a small business owner, man, share this information with somebody that's a like-minded person that may be in business as well. This is going to help somebody. We're going to show you how to scale your business, show you how to make sure you prepare for taxes, show you how to make sure that you always got enough money for marketing, and that you're ready for any kind of financial hardship that's going to come up, because we know if you are in business, financial hardship going to come up, man. I appreciate y'all for watching me here at Stormy Mattison, Stormy Matt TV. So let's just go ahead and dive into it. For one, if you're out there in business, a rookie mistake that we've often all made, I've made the mistake, and we've been in business for a good minute, from running restaurants to now the real estate consultant type business. But a rookie mistake that we often make is we commingle our funds. So which means we have a business account. We do the right thing. We go out here, we form our LLC, and we go to TD Bank or Bank of America, SunTrust, whatever, your local bank, and we set up a business account. So boom, we got one check mark, right? But then what we do is, how we get a minus is we start taking personal payments out of that business account. So we go on vacation and we swipe our business card. We say, oh man, we're going to put it back in there. Or we buy stuff for a birthday party, just get, personal things out the business account. And that's not what we need to do. What we should be doing in that capacity is, depending on how you set up, if you set up as a single member LLC, then you should just be writing yourself a check from your business account to your personal account. And if you're a corporation, then you'll be on payroll, so you'll already be getting the check. So that tackles that. So let's go ahead and jump into the 5 accounts that you're gonna need to set up. And I promise you, if you set them up this way, you'll never get in any tax trouble. You'll rarely have trouble with a marketing budget. You'll rarely have saving trouble. Now, if you do, what it means is it has something to do with your product or service. So at the end of the day, we know what we're doing in business is we're trying to attract some dollars. And I guess this would be a whiteboard presentation, if you would, right? So the first account that we need to open up, once you open up and attract some dollars, right, you need to open up what we call an operating account. So you would open up an operating account. Y'all see that left hand up there, that chicken, that Dr. Scratch, right? You open up an operating account. Now, what this operating account entails of, let me see if I can get my purple over here to give a little contrast. What the operating account will have is, it'll have money in. So maybe like your credit card deposits, your cash deposits, right? It has money in, and then it has money out for the business. And that's it. So it has supplies, bills, miscellaneous things that you need for your business. And that's what happens, is money in and money out. So account number 1. So your account number 1 is going to be your operating account. So that's the first account that you want to set up when you get in business. So you literally go to the bank. When you go to the bank, you tell them you want to set up a business checking account, and you're going to label it your operating account. And then when you get your POS system, whether that's with Toast, PayPal, Square, whoever you're doing POS, Clover, you're going to have your funds come through that operating account. And then you're going to have your bills, your supplies, when you go to buy food or go to buy things related to your business, come out. So that's your first account. Your second account that you're going to set up, your second account is going to be what we call a reserve account. So that's going to be your reserve account, because what's going to happen is, out of that operating account, right, let's say that $10,000, and you did this on a monthly. Let's say that $10,000 came into that operating account that month. But let's say that $5,000 went out of the operating account. So payroll, business supplies, things like that, right? So that left you with a $5,000 profit. So this is your money that you're going to play with. So off of that profit, you're going to take a certain percentage and send that to your reserve account. And what the reserve account is, like I said at the beginning, that's to help you when a crisis hits, when a financial hard time hit, because you're going to take a certain percentage, at least 10 to 30% of that profit, and you're going to send it to your reserve account. So if you took 10%, that means that, and if this was happening every month, you're going to be putting $500 a month into that reserve account. Now, as this number grows and the percentage stays the same, that means that your reserve account will go up, because even though the percentage stayed the same, the money that you were making went up, and you able to fund it with more reserve funding because your profits did goes up. So number 2 was the reserve account that you need to set up, and that can be a savings that you would have at the bank. And again, you don't want to touch this reserve account unless it's like absolutely necessary. I mean, it has to be super stupidly necessary. All right. The third account that you want to set up. Now remember, we going off a scenario that you had made out your operating account $10,000. You had supplies and goods cost of $5,000 and left you with a $5,000 profit. And that's how we are setting up. That's how we're funding these other accounts that we're setting up. So the third account, which is important, is going to be your tax account. So your tax account, right? You either going to be paying quarterly, or you pay at the end of the year, right? So people pay quarterly or they pay at the end of the year. So what you want to do is take a percentage, and you need to talk with your tax professional about what exact percentage you want to take, 10 to 20%. You know, you want to take a percentage of this profit and you want to put into your tax account. And if they can give you that correct calculation to know exactly how much tax money you need to put into your tax account at the end of the year or quarterly, you won't be running any problems, because you literally can go to that tax account and write a check out for the taxes that you need to pay. And that just alleviates the headache that you have about, oh man, what kind of money I need to gather up for taxes. You should already be real close to what you need to pay if you sit down and talk with your tax professional and they tell you, hey, man, you need to take 15%. If you're doing this, you need to take 15% of this and put it into that account. And it makes it a lot easier. You probably say, well, damn, man, there's a lot of accounts, but this just makes you look so much more organized. You can literally say, man, I know this is in this account. It don't have no other purpose but for taxes. This account don't have no other purpose but for savings. This account right here don't have no other purpose but for operating, right? So then you got your fourth account, which to me is one of the most powerful accounts that you can have, and that's going to be your marketing account. So your fourth account is going to be your marketing account, and off of that $5,000 profit that you made, you're going to take a percentage and you're going to invest it into your marketing account. So if you just took 5%, that means that, okay, now every month I have $500 worth of marketing that I could use to get me out here to help scale my business. Now, the great thing about this is when it comes to the marketing account, it is a tax write-off as well. So that means that you're going to pay less taxes. So if you can fund more money, if you can add a bigger percentage here, that just means there's less taxes that you have to pay. And on top of that, hopefully the marketing is helping grow and it's helping scale your business. So the marketing account is very important, and this lets you know how much money you're able to put towards marketing. So you know your budget, you know you're not overspending, for marketing, or if you want to up it, once you boost up your profits, right, or as your profits grow, then your marketing budget can grow along with the growth of your profits, if you would. So that fourth account is your marketing account again, which is an account that can be written off. The marketing can be written off. So this is this is a great account to set up. Set these accounts up, man. Don't have acid, if you would. Don't be that person who just say, okay, man, I'm just gonna set up these two and I'm gonna be all right. Man, it's most of the time, and other than them having minimum balances, a lot of times if you were able to set all these accounts up at one bank, a lot of times they have a incentive for setting up multiple accounts and having credit card processing. A lot of times they'll help you out with the fees. So check and all of that up front. If you go to them and say, listen, man, I got 5 accounts I need to set up. And if you know what you want when you go in there, it's going to make your life so much easier as a business owner. Imagine you going in here with this blueprint and knowing exactly, you feel me, exactly what you want to do. Man, it's going to be wonderful. So that's your 4th account that you got to set up, that you should set up. This is an opinion. And your 5th is a bonus. It's an innovation. It's an innovation account, which means your business has to grow and it needs to be innovating. So off of that 5,000, right? Because you're gonna run into new tools, new resources, new products that you want to offer. Like me, when I got in real estate, right? So, and I didn't do this, so that's why I want to share this with people. You know, I got in real estate, and now I want to get in, and we're getting into coaching. You know, we're getting into consulting because we've been in business so much and we've learned stuff like this. So just imagine if I had been doing this property, and over the course of a year in business, I had $5,000 to go into my innovation account because I was taking 10% out of my profits and putting $500 in here, right, for my innovation account. And I was only using it for innovation, for new ideas, new things that come up, right? And I gave it enough time to get seasoned. You know, I gave it enough time to actually build up. I wasn't just going to pull from it, right? So that's properly setting up your business to have an offensive side and to have a defensive side. See, the savings is a defensive side, right? The innovation and the marketing is an offensive side. It's saying I'm going to get it, I'm going to score, right? But we know that with a great offense, you need to have defense as well. And this is just a strategy that we want to show you about the 5 accounts that you need to set up. So those 5 accounts, again, let's just run them back through. It was number 1, your operating account. Which your operating account is the account that money comes into, the deposits, all the money funnels through, and then your supplies, cost of goods comes out. Whether you do this weekly or monthly, then that leaves you with a profit loss. What came out of your profits, and then off of that profit's 5,000. If it's 10,000, whatever it is, right? You're gonna literally take percentages of that profit. So that's all you're doing. If you start with the operation account, to make it look simple, as we close, as the preacher say, as we close, you taking that profit. You're taking that profit off of the operation account, and you just sending it to the other accounts. That's all you're doing, into your reserve, into your marketing, into your tax, into your innovation account, and you sending it in percentages. So that way, as your business grows, even if the percentages stay the same, it makes these grow. It makes these grow, and you know the numbers. Your business is traceable, and it's easier to be organized that way. So again, don't be stingy. This information can be shared with fellow business owners, fellow people looking to get in business. I hope this helps. If you need to reach a tax professional, I have a great tax professional that we use. And I'll tag him below, him and his team. He's out in Indianapolis, but he does have a couple offices and can help you, across the nation. So I appreciate y'all watching. It's a blessing to be here. If you watching, you blessed to be here. If you made it this far, do all those social things. Like, share, subscribe. If I left anything out, I know y'all good about critiquing people, so let me know that below. Man, I appreciate y'all. It's been real.